Hey guys, it's Dave here. Welcome back to another video. Sorry there hasn't been too much content lately. I was away on vacation for about the past 2 weeks, so it's been a little light, but I do feel a bit refreshed, a bit remotivated, and I'm excited to start making some new videos and focus a bit more on YouTube. Today we're going to go over Rocket Lab's Q3 results. I did do a quick live stream right the day before I left on vacation, but unfortunately due to technical issues, it wasn't able to get saved online. So if you didn't see it live, you probably lost it. Apologies for that. And I know this is a bit delayed from when the Q3 results came out, but I did want to go over it all now that I'm back. So we're going to talk a little bit about my key takeaways, go over some of the numbers they gave us, and just talk about how I think Q3 went overall and what kind of guidance we're looking at for Q4. If you haven't joined the Discord yet, we do have a link down in the description below, and if you do like this kind of content, please consider hitting like and subscribe. It really helps the channel. I really appreciate every single subscriber I get, so if you haven't already, do hit that subscribe button. And with that, let's dive into Rocket Lab's Q3 results. So first off, I just wanted to talk about an exciting bit of news around the Globalstar contract. If you're not familiar with it, this is pretty much the biggest contract they've ever had for satellite manufacturing, and it's an extremely important piece of the business right now. It's frankly probably more important than even a lot of the launch going on, but it doesn't get a lot of attention, so I just wanted to highlight it a little bit. And what we found is that Rocket Lab is now to provide Global Satellite Operations Control Center for Globalstar's growing constellation. So they will serve Globalstar's existing satellites as well as the new 17 satellites that Rocket Lab is building. And by the way, these are not small little satellites. These are quite large, quite complicated satellites, so not small sats or anything like that. This is actually an extension to the massive $143 million satellite design and build contract they already received in 2021. So great news for the company operating these satellites as well as just building them for the company. We're really driving up that vertical where we're not just providing parts anymore. We're not just building the satellites anymore. We're now providing operations and managing satellites. Great stuff. Really shows that we're able to build and operate our own satellites, frankly. The next step after building these satellites for someone and operating them for someone is just building your own and operating them from yourself, cutting out that middleman and taking even more recurring revenue. So just a little bit more details on this contract. It leverages Rocket Lab's ability to provide end-to-end space mission solutions at scale, like I was talking about. So we have the 24/7 Space Operations Control Center. Solar panels are provided by Rocket Lab via their Solaro acquisition that they made, I believe, last year or the year before. A great strategic acquisition for the company. One of only a couple companies out there making really high-end space-grade solar panels, supplying power to space ships, satellites, and stations. So, they also have 2 Rocket Lab C-band radios per spacecraft, 34 in total. They have an exclusive manufacturing license for these radios from APL. The Max Flight software will be running on all 17 of these satellites, powering and controlling the satellites. That is also an acquisition Rocket Lab made previously to have the software controlling satellites. They're going to internally build the power distribution system. This is more of an organic growth from within the company, as well as the option to increase value with launch dispensers. So I think really this contract, I love it because it just goes to show how all the acquisitions come together and Rocket Lab is really vertically integrating, performing all these different functions and becoming a full service space company, capturing all the value along the way of that value chain. Love to see it, and exciting for what it means for the future, in my opinion. Now just diving into some of the numbers, we saw $63.1 million of revenue in Q3, which was a small beat compared to projections. So that was good to see. I like to see that. 14% quarter-on-quarter revenue growth. That's also an excellent number. This was driven by launch services growth of 20%, 8% and space systems growth of 10%. So really both sides of the business, systems and launch, firing on all cylinders here. So you can see the GAAP and non-GAAP revenue growth in the chart here. The backlog has decreased by about 10.8 million, so close to $11 million. That's something to keep an eye on. I'm pretty comfortable with where the backlog is right now, still at over $500 million. But we do want to keep an eye on it and make sure it doesn't keep decreasing. I think we all know that the backlog can be lumpy. You sign one of these big contracts like that MDA Globalstar one worth, $150 million, and that's over a fifth of your entire backlog right there. And then, of course, as you complete some of these big contracts, that can have a big impact on your backlog on a quarter-over-quarter basis. But overall, I think we're still doing okay. So launch services had 3 successful missions, which is great. We really want to see at least 3 successful missions per quarter at this point. That would be 1 per month. Anything less than that is a little bit disappointing to me, and we're looking to see even more than that going into next year and into the future. Overall, I do like these numbers and pretty happy with the revenue growth. So now we're talking about year-on-year growth as opposed to quarter-over-quarter, and this is an absolutely crazy number, 1,093%. I don't know if I'd read too much into that just because Q3 of 2021 was a little bit ridiculous and we were really hit by COVID. Things were going poorly. So yes, this is massive growth year on year, but that's a little bit skewed because of this quarter was so poor. So while this growth is great, don't be expecting 1,000% growth year on year, every year. That's just not going to happen. It's really impossible. They did have some good contributions from some of those acquisitions I spoke about, as well as the organic revenue. So operating expenses coming in a little bit high here. The increase was driven by amortization around some of the value of their acquisition of PSC, one of those companies they bought. And I will say, as I always do, we have R&D and SG&A here. If you're not familiar, R&D, research and development. SG&A is selling, general, and administration. So basically, sales and admin and that kind of stuff. So I like to see R&D high because that's going towards developing future products, future rockets, and setting up production lines, things like that. I'm absolutely good with that because it means it's going to drive more revenue in the future. While I like to see SG&A spending controlled as much as we possibly can. So we got a bit of a jump here in the SG&A from 19 million to 23 million. Definitely going to keep an eye on that. Hope that trend doesn't continue. Although we do see here that it was more of a one-time event, so hopefully in the future that will drop. You see the R&D non-GAAP expense increase driven by Neutron development. Again, I'm okay with R&D increases because it's going to these future product lines. So ending cash and then some metrics here. So they did make an investment where they put some of their cash into a security, but that really doesn't affect the cash equivalent. So we're looking at about $515 million, which is a decline of about $31 million. So we do have still a pretty decent cash cushion here. If we're looking at about $31 million a quarter, you multiply that times 4, you're looking at about 120 million cash burn a year if we continue at this rate. So we have like 4 years worth of cash, but you do want to keep an eye on it. You want to see the burn. We know it's going to continue because of Neutron development, but you just want to make sure they have enough to bridge to profitability, because anytime a company gets questions around being able to stay afloat, that's very difficult position for a company to be in, and we all know the market is not kind right now to growth companies. So, yes, we're still burning money, but we are, this is the 188 million investment I was talking about. We did have a little hit due to foreign exchange, which is pretty normal right now. A lot of companies are getting hit by foreign exchange for some reason, and we just want to keep an eye on the cash flow and make sure that we have, sufficient cash to fund future operations. Financial outlook. So Q4, they're expecting revenue to range between 51 to 54 million. So if you remember, this quarter we made 63.1 million. So that's a little bit disappointing to me in that it's a pretty big sequential drop. You really hope to see continued growth, but there's good reasons for it. So Space Systems will be 34 to 37 million and planning 3 launches for the quarter, which is, as I said, what I like to see, at least 3 launches or else I will be upset. So what happened to cause this drop? Well, I'll tell you a little bit about that in a future slide. We'll get into the Q&A. But they expect GAAP gross margin to range between 5 and 7%. This is a little low. It's driven by a lower margin product mix. So in the Space Systems, they're selling more low margin products this quarter as opposed to last quarter. And therefore, the margin is a little bit lower there in Q4. Their operating expenses are planned to be 39 to 41 and non-GAAP operating expenses 28 to 30 million. Sorry, I don't want to bore you guys with too many numbers, but I do think it's important to go over the finances and not just talk about the fun stuff like the technology. We really need to make sure our investment is making money in the future. So they're expecting an adjusted EBITDA loss next quarter of $12 to $16 million. Basic shares outstanding, not rising very much. This is pretty much what it's been sitting at for a little while. So nice to see. You don't want to have a ton of dilution if they keep issuing more and more shares. That means your shares are worth less and less of the overall pie. So from the Q&A, this is what I wanted to get into. First of all, they're asking about acquisitions, and basically Adam said, we continue to see organic strategic growth opportunities, but there are no deals currently in advanced stage of discussion. We did see that they have a good 4 years plus of cash cushion, and I don't want to see that dilute too much. So yeah, some of these deals, like, it makes a ton of sense for them to come together. Like I talked about how they can provide all these different pieces of building the satellites, and now they're really able to do a lot of it themselves. But I don't want to see the cash cushion drop too significantly. So if they do make more acquisitions, I really hope that it will, and apparently I can't spell either, guys. My apologies. But if they do make more acquisitions, I really hope it's more of a stock type deal or something like that, because I like to see that cash cushion really solid. So I'm actually kind of happy to see that there's no deals in an advanced stage, as counterintuitive as that may seem. More Q&A takeaways. So Q4 guidance, we talked about this a little bit in the previous slide. We had one launch that the customer pushed into Q1 of 2023 from Q4 of 2022. Basically, the customer wasn't ready. This is unfortunate. Otherwise, I guess we would have had that 4th launch, which would have been a significant improvement to revenue, probably about $8 million. Also, this recovery attempt we just watched recently, it did happen in Q4. Basically, what they're saying is they didn't make as much money off of it as a normal launch. They really just wanted to get it out and get the recovery attempt going. So I guess perhaps the rocket wasn't as full as it could have been, or something along those lines. So that one will also fall to the bottom line in Q4 as they try to take opportunities to work out the kinks on recovery. This is kind of a short-term thing, though, not a long-term issue, so I'm okay with that. Guiding for 14 launches next year, which is pretty good. We're above the 1 per month mark, and so that's a pretty decent growth. As we've said previously, we really want to see kind of 20 to 24 launches over the next few years to really start becoming really profitable and making a ton of money. Adam Spice, the CFO, did get a question around profitability and number of launches. So he said, this is a quote from him, I'd call it probably, let's say, a solid 4 fully priced launches per quarter is probably where we move into that GAAP positive gross margin. So 14 should be very close to becoming profitable. And as we hit 2024, Electron should be fully profitable if they continue to expand these launches and if recovery is successful. That lines up pretty well with some of the projections I've made in spreadsheets in previous videos. Q4 guidance, as we said, we're looking at 51 to 54 million, a little bit lower, a little bit disappointing, but there are reasons for it, of course. Launch services only 17 million, as we see that one launch move to the next quarter. Space systems decent at 34 to 37, but still a little weaker as we have some lower margin revenue, probably from Solero, which has got a lot of those contracts looking at below 30% margins compared to some of their other businesses, which are more profitable, as we discussed previously. Also, we have some funny accounting things here where, for example, their Solero side of the business is making cells for these MDA satellites that they're making themselves fully. And so they make these cells. They don't actually get that revenue until they sell the whole satellite, which they've made themselves. Whereas if they just make these solar cells and they sell this so many cells, and they sell them to someone else, they would get that money right away. So there's a bit of a delay in when they see the money from the projects that they're working on with the solar, as well as other internal parts of the business. So a bit of a delay in recognizing that revenue, but when they do eventually recognize it from these internal projects, the money should actually be a lot better, because they're really cutting out all the middleman. They're not just supplying a part, they're building the whole thing. Looking at a few charts, I just made these myself because, once again, rest in peace Hypercharts. I used to love that site. So we have the revenue and EBITDA for the company, and overall the trend is pretty much what you wanted to see, up and to the right. Pretty good numbers here, although, as we discussed previously, this projection for Q4 is down slightly due to some factors, but I can expect it to continue to go up in the long run. If we were to see an overall chart, the trend is still in the right direction. However, our EBITDA numbers are still in the negative. So as these numbers rise, we really want to see EBITDA continue to push towards that break-even part. If you're not familiar with it, EBITDA is earnings before interest, depreciation, and amortization. So just taking out some fees and stuff like that. But we really want to see these numbers break even. We're looking at 2024, 2025 for that to happen probably. So we just want to make sure we have the cash to get there. And once we do break even, hopefully we'll have made the investments that it will swing extremely far to the positive side very quickly. Right now, however, we could be looking at a couple years before we really see that, and the stock price could really pop based on profitability. Just adding their cash and cash equivalents to this chart. So what you really want to see, of course, is the red hit profitability before the yellow cash hits zero, obviously, at which point they would be out of business if they didn't raise more money. And it looks like we're on track to hit that. It's hard with this this chart, but we are moving slowly towards break even, and the cash cushion is still looking relatively healthy, especially compared to some of the other space companies I've seen out there. That's it for the data from the earnings call. Let me know how you felt about it. Were you happy with the results? Were you a little disappointed with the Q4 guidance? Thought it was a little weaker maybe than you were expecting? Let me know down below how you're feeling about the stock. I know we've kind of been languishing around between 4 and maybe 4.7. I'm okay with it sticking around here. I still did want to add some more shares, a few more to get up to that 10,000 share count. But as I've said previously, I don't really expect that massive explosion or the big pop in the share price until we hit profitability. So this is a long-term investment for me, and I do think we have to be patient. However, I don't predict short-term prices in the stocks, so your guess is as good as mine on the next year and how the fluctuations will go. So just to wrap it all up, I thought Q3 was a good quarter. We beat by a small amount on revenue, and everything was looking pretty good. The only concern is guidance for Q4 is a little bit weaker than I would have wanted. It's nice to see we'll be getting about 14 launches next year, so that's a good increase, and we're seeing the launch cadence slowly rise. Once we get to 16, we'll be looking at solid profitability, and 2024, everything up past that is just gravy as we make more and more money. That doesn't even bring into recoverability and reusability, as those really push how much money Electron can make. Space systems side of the business seems to be working well. That MDA Globalstar contract is huge for us, and it's even expanding. So really excited to see more of these in the future as we push towards a full end-to-end space company and even operating our own space assets in the future. Let me know what you felt about the quarter down in the comments below, and I will see you guys next time.